Earlier this week, Intel, or INTC stock, had a special meeting talking about their new segment reporting, where really it's a path of two different companies here. You have Intel Products, where it's the core chips that go into, let's say, desktop computers, servers, notebooks, data centers, and Intel Foundry, where they're saying, hey, we want to be one of the pioneers in being able to build the most cutting edge chips. So we will have third-party customers design the chips. They will come to us to build them. And so that's the goal, have Intel Foundry and Intel Products. Currently, Intel Products is really what's driving the vast majority of their profits, but they're looking to spend tens of billions of dollars, greater than $50 billion, some of which has come from Western governments. You see US CHIPS Acts, you see European incentives, as well as prepayments from customers, as well as financial partners, all in chipping in around $50 billion to make the dream of being a leading foundry a reality. That's the goal, at least, spending tens of billions of dollars. It's a big bet. And a large part of it is because of the neighborhood of where arguably the best current foundry company, which is Taiwan Semiconductor, is. And this is, I say neighborhood, with the memory of Warren Buffett talking about it, because for a brief period, Berkshire Hathaway owned Taiwan Semiconductor, and he got out of it, I think, and he said if it were in a different neighborhood, he would have owned it for longer. And it was this prospect that not due to the uncertainty of, there could be an earthquake like you saw with Taiwan this past week. And, my heart goes out to everyone that unfortunately perished in that event. Fortunately, it seems like a lot of the construction was just really well done over the last few decades, where they've prepared for crazy earthquakes like this. Speaking of earthquakes, I think New York had an earthquake just a few hours ago, so that had some people shaken up. But the people in Taiwan are like 5.5 earthquake. Like they're dusting off their shoulders, because the difference between like the 7 and the 5.5, that's exponential. So you're talking about multiples worse in Taiwan. So all the New Yorkers, oh my God, things are shaking. It's like, all right, get a grip, folks. Like it's not that big of a deal. Knock on wood. We better cancel the plane flights. Sorry. So what you're seeing here with Intel is they're saying, yeah, we need to make sure, and this is also governments around the world saying, we don't want, if China were to blockade or invade Taiwan, which arguably they've threatened to do repeatedly, we don't want them to then limit our ability to get these chips that are critical for the AI revolution. So there's this clear understanding, okay, let us put whatever it takes, tens of billions of dollars, so that way we can move that chip production back into regions where you feel a little bit more comfortable, that you don't have that sort of sword of Damocles hanging over you, that at any moment you can lose just this critical resource. And so that's, and this was actually a question this past week with the earthquake in Taiwan, was how long is the Taiwan Semiconductor chips going to be offline? They were offline for a little bit, and they have over 50% market share in the most cutting edge chips. So this is super important. And Intel's saying, look, we're going to spend tens of billions of dollars across various different, series of technologies, including the most cutting edge, where they're saying, look, $25 to $30 billion they're looking to spend, and they're looking to be one of two competitors. They're saying, we want to be with TSM. We want to be one of the big dogs here. And it's just extremely challenging. I mean, this is a huge bet. It's extremely challenging partly because they're nowhere near that in terms of delivering it right now on a profitable, sustainable basis. And their goal is, saying, hey, in the next few years, maybe we get to break even. And so you could see sort of, this is the goal from a break-even foundry perspective of you get 30 to 35% margins in their existing products business, then 0% in foundry, and then consolidated, somewhere in the 20s. But then longer term, maybe closer to 2030, you're talking about foundry, maybe at 25 to 30% margins, Intel Products closer to, 40%. So looking at around 40% margins, that's the goal longer term on a consolidated basis. We'll see how that, sort of works out. The challenge is just the loss in terms of what they're investing in terms of foundry. You really are making a bet on a future that is just so dramatically different from where it is today. You can see how foundry has had just year after year of sizable losses. I mean, not many investors and companies could stomach saying, hey, we've spent the equivalent of $17 billion just in losses in the last 3 years in this foundry segment, $7 billion last year alone. So this is a all-in bet on, hey, we need to be a leading foundry. And it's partly because the world, wants it once again in a region where you feel more comfortable. It's sort of bizarre how they did these charts like this, because usually you read left to right versus right to left. But here it is, because if you're reading these left to right, you're thinking, man, this is fantastic. They're doing great. But no. You got to read it right to left. And it's like, this business, this is what's supposed to be their other core business, Intel Products. And this is ugly. $70 billion in revenue to under $50 billion. Profit margins have collapsed from $30 billion in operating profit to $11 billion. So not only do you have this all-in bet in the foundry segment, you also have their core products business that has come under pressure. One of the key segments here is their data center, which ugly as well. I mean, you see it's clearly losing market share. You see, companies like NVIDIA saying, we are winning in the data center. They're saying we put up 200% revenue growth, and that's the exact opposite of what you're seeing here. So, this is a very tough and trying moment, I would argue, for Intel. And, I'm not sure it's actually reflected in the stock, because, the data center profits alone have dropped from $9 billion to $1 billion in the past year. And they talk about primarily driven by a decrease in server revenue. Server volumes decreased by 37% due to lower demand. That is due to softening of the CPU market. That is not what NVIDIA is seeing. So they're clearly, losing market share. And when I run this through AI Ticker Chat, AI is obviously one of the key industries being powered by these cutting edge chips. And so running it through AI Ticker Chat, there's a new feature that we're rolling out called scorecards. So that way you can assess the qualitative aspects of the business, understanding financial health, market position, looking at all these different things. It actually, Intel broadly gets a fairly low score of around 5 out of 10. So this is not in my opinion, a passing score, looking at all these different elements. So not surprising, especially given that you've seen them take on a huge amount of debt in order to make this possible, this huge bet on the foundry. So check out AI Ticker Chat if you're interested in, learning not only about the quantitative framework for understanding stocks, but also qualitative. We'll have this rolled out in the coming weeks this month. And so the question is, looking at Intel, is there potentially a value angle for investors to consider? First of all, in full disclosure, this is not financial advice. Also, quick plug, last weekend, a premium member of the Unrivaled Investing community shared the following. This is a direct quote. I got introduced to the markets as a speculator during the 2020-2021 bubble. Your content really helped me understand long-term investing. Most of the online friends I made during the bubble are still speculating. I'm trying to convince them to join your membership. The unrealized profits from, and he mentions 2 of the companies I've called out and I personally own, is enough to cover 302 years of membership. So if you're looking for compelling investment ideas, feel free to check out unrivaledinvesting.com. I also have educational materials if you want to learn how to, let's say, read financial statements or how to value stocks. It's what I wanted to know and what I learned from working on Wall Street. So thinking about Intel, what's really good, drive it from here in order to be, a compelling investment, is a key aspect is this chart. And arguably, I've seen a lot of charts like this back when I was covering SPACs on a daily basis, and I was the vast majority of which I was saying, man, this is a hard pass. But this is the type of hockey stick graph that, gives me pause. When you say, hey, external foundry revenue, effectively customers outside of Intel that will want to use their foundries, they're saying it's effectively nothing today, but yeah, they think they can be 15 billion annually by 2030. And so that requires them getting to the position where they can make those chips. Maybe they can. I hope they can. I am hopeful for Intel, like thinking about them. Like I want there to be multiple players creating the most cutting edge chips. I'd love an arms race with that. I think at the end of the day, the consumers, the businesses would benefit from that in terms of, lower, cheaper processing, better, you'd get more and more models that you could use. I just think broadly, everyone wins with more competition here versus having one player dominate the market with over 50% market share. The challenge is that Intel right now, around $39 per share, is a $164 billion company. So, I mean, if you're talking about value, you're arguably hoping for maybe 100% upside, 200% upside. So what you're really saying is, hey, how do we get to 300 to 500, 600 billion dollar market cap in order to make this compelling? Thinking about that. And that's just hard to get to when you look at where the business is today. Looking at their Intel products, that's $11 billion, previously closer to 30 billion. You'd have to have a real conviction that they're going to turn that around. So this is not only an all-in bet on Foundry and sort of a speculative bet that that'll work. Who knows if they can actually pull that off. You also are making a second bet that, yeah, this Intel products could also improve significantly. This Intel products could also turn around. And so to have two bets that are required in order for this to work out, it just gets really hard, in my opinion, to get high conviction like, oh, this is a value bet. Now, if you're closer to the situation, in terms of thinking about Intel, I'd absolutely, love to hear your thoughts on it. Because, as I look at this and think about it, I just honestly think that cash, and I call out, I personally use Interactive Brokers, see the link below. I personally think the yield on cash, even if there are possible Fed cuts this year, which is increasingly, the odds are increasingly dropping, that there's a good chance that outperforms a more speculative bet like Intel. It's just super tough because you have these dynamics, where you're betting on a turnaround in their products division, and you're betting on the tens of billions of dollars that they're putting in to just sort of catch up with Taiwan Semiconductor. Once again, I hope they can do it, but I think a prudent or a disciplined investor would say, I would rather wait when I can see the foundry segment has clearly delivered on their milestones of delivering the next generation chip. It's clearly getting those external customers, and it's at break even. I think at that point, you're more likely. Like, I think the conservative investor is going to say, oh, okay, one of these bets is working out. And so in all likelihood, I think most investors, myself included, are just going to put this in the too hard pile. From reading, Chip War, fantastic book. It's just very clear the dynamics in the industry change significantly over time. And so, yes, I hope they win, but there's no guarantees. And so if you wanted to speculate on Intel, I personally would, if I personally wanted to speculate on Intel, I would wait until I would see more of a clear signal in terms of their underlying operations. Or I would wait for a price where it's just like crazy compelling, where, the market cap is teeny tiny relative to just one of the segment's operating profits. If you were to say, hey, the operating profits from Intel products is $10 billion in operating profits, and the market cap is $40 billion, then I'd say, okay, now you're looking at several pieces that could be interesting. If Foundry actually does work, then you get a lot of upside. And even if that doesn't work, if you just have products. So I think that's more the value investor's mindset. But I look at this, it's just too hard for me. If you have a different opinion on it, I'd love to hear it, because I'm looking at this, running it through AI. AI is also sort of saying it looks kind of ugly. I'd love to hear your take if you think this is actually a beauty queen or something like that. Thanks so much for tuning in to Unrivaled Investing.